It's time now for business. We say hello to Camille Knight.
Hi, François.
After the change of prime minister in France, still the same budget conundrum for a hung parliament ahead. I think you're on something of credit watch today.
That's right. Ratings agencies don't like political uncertainty, and there's nothing stable about what's been going on in France recently. The collapse of François Bayroul's government and the appointment of Sébastien Lecornu to replace him hasn't particularly reassured agencies that France is going to bring its spending and debt to GDP ratio under control anytime soon. France faces a string of key debt rating reviews that start at the end of this week, with Fitch scheduled to kick things off this Friday, with a negative outlook already in place. Moody's and S&P Global should follow with their own reviews in October and November. France's rating was already downgraded by Moody's after its previous government collapsed last year, and it now risks being downgraded to a single A rating. What that means exactly is that it would send the message that the French government is riskier to lend money to. It would increase France's cost of borrowing, making it more expensive to service its already large national debt, and would weaken investor confidence. Now, there was some good news for France this Thursday, as its National Statistics Agency raised its forecast for the country's economic growth to 0.8%. It's less than the 1.1% growth recorded last year, but is still more than previously forecast. The head of the agency said this was mainly due to the agriculture, tourism, real estate and aerospace industries. Meanwhile, Christine Lagarde, the president of the European Central Bank, also sought to ease fears about France. This after the bank voted to keep interest rates steady. Let's take a listen.
I would say that I'm confident that the policymakers, that those who make decisions, will take it to heart in that period of uncertainty to reduce uncertainty as much as possible.
Let's take a quick look at the markets now. EU stocks closing higher on Thursday as investors digested the ECB's decision to keep rates steady. Looking at individual stocks, Gucci owner Kering added 2.4% after it said it would delay its acquisition of Valentino until at least 2028. In the US, meanwhile, the Dow gained 500 points, the S&P and Nasdaq also climbing in early trading, and all three averages hitting all-time highs. The CPI recorded 2.9% on a 12-month basis, in line with expectations. However, it also showed an increase of 0.4% for the month, which was higher than the 0.3% that economists were expecting. Now, adding to that, weekly jobless claims saw a surprise jump, increasing 27,000 from the previous period, bringing them to the highest level since October 2021. It would seem, for now, investors are taking the bet that this won't stand in the way of the Federal Reserve lowering its main interest rate next week. The title of the world's richest person briefly changed hands this week as Larry Ellison, co-founder of business software firm Oracle, saw his net worth eclipse that of Tesla's Elon Musk. Ellison's personal fortune hit a peak of $393 billion as Oracle shares soared more than 40% on big revenue forecasts tied to the artificial intelligence boom. By the closing bell, Musk was back on top as worries build up that the AI boom could just be an AI bubble. Brian Quinn has the details.
Riding an AI rocket ship to the stratosphere of wealth, Larry Ellison briefly dethroned Elon Musk as the world's richest person Wednesday, his personal fortune hitting an estimated $393 billion. A co-founder of Oracle, the 81-year-old Ellison owns a 41% stake in the software giant, whose shares soared more than 40% Wednesday on its latest quarterly report. Though the company missed its current earnings target, it announced 4 new multi-billion-dollar contracts for its AI cloud infrastructure business that will see revenues hit $144 billion per year by the end of the decade.
They projected a backlog of over $400 billion. It really puts them in the forefront in the AI race, and as far as providing capacity in order for that industry and that movement to continue to grow.
Oracle shares later gave up a bit of their gains, putting Ellison back in second place. His $383 billion net worth still higher than the annual GDP of the entire Czech Republic. Oracle itself is now heading towards a $1 trillion valuation amid an ongoing AI boom that has driven tech shares to record highs. The sector's increasing dominance of U.S. markets, though, is causing concerns. AI-related capital expenditures like data centers now account for more of the U.S.'s GDP growth than the entirety of the country's consumer spending. Meanwhile, profits have yet to arrive. OpenAI, whose latest funding round valued it at $500 billion, says it's unlikely to break even before 2029. Some analysts are warning that AI stocks are now more overvalued than tech shares were during the 90s dot-com bubble.
The risk here is that Oracle's biggest customer, OpenAI, doesn't quite deliver what expectations are.
All right, so the market's believing that the inflation numbers aren't so bad, and now this question of whether or not AI can meet its targets. We'll see. It's exciting times ahead for investors. Thanks for that, Camille Knight, who'll be back with more business news, including the closing word on Wall.